business owners, big welcome. Welcome to the Futurize Your Business interview series. In this episode, we'll be talking to two tax experts from Grant Thornton, Raj Deepan and Sandra Boswell. They're both partners at Grant Thornton, and I'll be talking to them and unpacking the recent federal budget and all the tax benefits for small and medium businesses. There were lots to discuss, and I'm looking forward to it. Now, before we get started, don't forget to press the subscribe button below. And at the end of the interview, leave us a comment, and don't forget to press the like button. Great to have you with us, Sandy and Raj. Before we start, please tell us about what you do for Grant Thornton and for small business.
Thank you, Dinesh, for having us. Obviously, Grant Thornton, global accounting firm. We're in 130 countries. We're all across Australia. We do focus on what we call mid-sized business, but we're also pretty passionate about helping small businesses to grow and become mid-sized business. My areas of focus is technology clients, predominantly Australian tech clients that are fast-growing. They are small business clients. I also, initially, started working with large, tech clients globally who are setting up in Australia. So about 30 years experience. I'm a business services type partner working across tax, accounting, advisory work, and I really enjoy, working in these areas. And I'll now hand over to Sandy.
Thanks, Raj. Hi, everyone. I'm Sandra Boswell. It's great to be here with you guys this afternoon. My background is a partner in innovation incentives in Grant Thornton. I have worked in this space for about 25 years, particularly with SMEs around accessing support, government support and grants when you're undertaking or doing innovation in Australia. I helped draft the current program that's in place back in 2010 with government and with Treasury. And I often will liaise with government around the policy issues that relate to innovation. So it's a really exciting budget for us this year. And there's a lot to talk about this afternoon. And I know most people, when they hear that we're going to talk about tax, don't switch off yet because we've got lots of news for you that's come out of the budget.
Sandy and Raj, thank you for that. And you did say it was an exciting budget for small and medium enterprises. So let's get to the major benefits for business. Can we start with you, Raj?
Yeah, thank you, Dinesh. I just wanted to mention, as well, individuals as well benefited in this budget, right? So it's in two stages. Stage 2, which was meant to start 1 July 2022, has been brought forward to 1 July 2020. What's that doing is pushing out that 37% tax rate from 90,000 to 120,000. And then in stage 3, we are looking at the high income earners, which is going to be effective 1 July 2024. And what that's doing is pushing out the top marginal tax rate from $180,000 to $200,000. So just to point out, there is tax relief there for individuals. Obviously, the SMEs, obviously are linked to individuals being the directors and shareholders. So there's relief for the individuals as well. From an SME, from a company perspective, I think, a couple of things that are in there. Obviously, the job maker program that's coming in, post job keeper. So that's going to provide some incentive for companies to grow their employee base. So that's going to come into effect. I think it pays $200 a fortnight if you've been a certain age. I think it's 16 to 35. And once you're a bit older, it pays $100 a fortnight. So look out for job maker. So it's a way of government saying, look here, if companies are prepared to create new jobs, then they're going to provide some grants. So for me, that stands out. The instant asset write-off obviously has been extended as well. So we can talk a little bit about that a little bit later. And they've also brought back an interesting one, which is the carryback of losses, right? So we've had that before, and there were some challenges with it, but now they brought it back, and recognizing the fact that we're in a COVID environment. We could be in losses now, but we might have paid tax in previous years. So FY20, FY21, FY22, if you're in losses, there's an opportunity to offset that against profits made in FY19 and claim back tax credits. So at this stage, I think FY20, you can't claim back a tax credit, but FY21 and FY22, you actually physically get cash back. So, which I think is a good thing, but there are some issues around, this carryback and claiming losses against previous profits. So it's early stages, obviously, with the legislation. It's got to go through Parliament, and there will be some measures put in place to make sure that it works well, because as I said previously, there were some issues with it, right? So I might hand over to Sandy now to talk about some of the measures, and obviously come back and talk about a couple more. bit later.
Thanks, Raj. I think what we saw in the budget was really positive sign from the government that they want to stimulate the economy and they want to see us grow out of recession. And a big platform that they announced, what we were really excited to see, and also for a few reasons which I'll go through, is around certainty for the R&D tax incentive program. There's also some grants funding and some other programs that I know Raj is going to talk through beyond what he just mentioned in his opening comments. But from an R&D tax incentive point of view, you might remember, and as an SME, I'm sure you look to access this if you're doing R&D here in Australia. It has been under review for several years. So I think the first time the government was starting to look at it was way back in 2015, sort of saying, look, we've had this program now for 5 years. Is it working? Is it effective? And is it sustainable? So, it was a bit of a victim of its own success. It was getting 30% increase in claimants year on year, particularly in the refundable end. And clearly that's an expensive platform for the government to invest and support business in Australia. So the debate started way back in 2015. We saw several bills go to Parliament from 18, 19 and even this year, and then COVID hit. And in those bills that were put before Parliament, really it was about ratcheting back the support. But I think the government has really listened to the business community and to SMEs around the support that they need to grow out of this recession. And as a consequence, they've announced some really good changes and provided some great certainty to this program in Australia now going forward. If you're happy for me, Dinesh, I can just run through what those changes are. But I think, it's really comforting to see that we now have that certainty and clarity.
Sandy, absolutely, because this was an area of absolute confusion for small and medium enterprises and startups. I'd be really looking to you to lead us with a lot more clarity.
And in fact, I just got off a very long session with my team. We've got 15 specialists that work at Grant Thornton in this space, and we've just been unpacking the detail around the changes in the budget because they've already been passed by Parliament. So that in itself is very, very, very fast. Good. But just to come back to what is it? What have they changed? And remember for the R&D tax incentive, for those of you that are thinking about accessing it or have done so in the past, if your turnover is less than $20 million, you can get a refund if you're in losses. Now that's a lot to take in, I know, but essentially the government is saying that an SME for the R&D tax incentive is at that threshold level of 20 mil or less. What's great to hear is there's going to be no cap on the refunds. So that was something that was being debated within the community and by government. They wanted to put a cap on the refund amount. That is not going to happen. So they've announced that they are scrapping that in the budget. The other great piece of news is the actual rate for SMEs up to 20 million is going up. So we're going to see by 1 July 2021 year that companies will be able to access 18.5% permanent benefit at 43.5 cents if they cash it out. So it's now linked to the corporate tax rate, and we're going to see companies be able to get, a really strong commitment from the government around providing support to innovate here in Australia. That makes us globally competitive and even within the region. For example, New Zealand has a 15% tax credit now. So, the fight for the innovation dollar around the economies is strong, but more importantly, this is going to be such a great lever to help companies get out of the recession and to build some great new products, loosen up our supply chains, protect our sort of manufacturing sectors that are rebuilding and now have pivoted around the COVID type projects. Those are some good examples that we're already seeing. That's for the sub 20 mil. Sorry, Dinesh.
Yes.
Above 20 mil, which in my mind, to be honest with you, isn't a large business. It's just a threshold level around refundability. You have turnover of over 20 million, and a lot of SMEs do. What's great about this budget now is that there was talk that there'd be an intensity threshold to get into the program. And I would often talk about this publicly to say, look, that's a real penalty. That's not a lot of companies who are doing a lot of grassroots R&D here or manufacturing here. They're going to have high costs, so their intensity level is quite low, but it doesn't mean they're not doing good R&D. Thankfully, the government has listened to that feedback. And what we're now seeing is that everybody, 20 mil above and below, you get a minimum rate of 8.5 cents, which is the current rate, and that's going to be maintained. And just remember, it's already been passed by Parliament, so it's not up for debate, which is also good. It gives companies certainty about investment over the next few years, which I think is fantastic. The great last piece of big news in the budget was for those companies above 20 million, if they have a bigger intensity than, I think it's more than 2% of their expenses, they can qualify for 16.5%. So it's an incentive premium now. So it's incentive intensity threshold, not a penalty one to get in. That too, I think, has been met with a lot of interest interest in the business community, and hopefully will spur on bringing projects here to Australia. So that's sort of good news on all fronts, really. There's a few things around the detail that I can run you through as we go through today, but they're the headline features of the reforms, and all good news for business and great news for SMEs who are really trying to kickstart the economy here in Australia.
Fantastic. Thanks very much, Sandy, because these were areas where lots of startups who were doing genuine R&D felt that they wouldn't apply for the R&D incentive because of all the issues and the complexity around it, because there was so much uncertainty there. So I'm sure this will be a breath of fresh air for all these guys who are doing genuine work and who really want to innovate in this area in our country. You also made the point that we are now at 18% and above our friends across the ditch, because New Zealand always had this focus on innovation. So that's good news.
It is, because I've been talking to some companies who are saying they'll move projects there. So I think this is actually a really good, line in the sand by the government to say, no, park your R&D here, leave it here, and we'll support you. And that's great for business here in Australia. There certainly is, I think, reforms around some of the administration aspects of the law. And here at Grant Thornton, what we focus on is really around the whole cycle of innovation. So Raj and I often talk about this, don't we, Raj, around following not just the R&D tax incentive, but what are you doing around that cycle of innovation, and how are you managing, to be tax effective, to make sure you can access grants, that you're documenting the innovation that you're doing, that you're protecting the IP that you're developing, and then you're coming up with an exit strategy or an M&A or an IPO strategy that you want to actually then leverage off this great innovation that you've developed. So that's what we do at Grant Thornton. We work together within our teams around not just talking about a compliance matter, but really talking to the SME about their whole approach to innovation. That's, I think, what makes us a bit different. And Raj and I already work on a few clients where we do just that. We go out to them and we say, tell us where you're at in that cycle of innovation, and then let's unlock that together and focus on the areas where they need some help. Because it may not be the R&D tax incentive, it may be JobKeeper. It may be, they want to understand the instant write-off rules more. It may be that they're looking for an exit strategy. Or they're looking for investor funding. So we'll work looking for companies to find investment. I've spoken a lot, so Raj, I better pass it back to you.
Absolutely. And I enjoyed all of that, Sandy. And, it's really exciting to hear that the R&D is heading in the right direction, because for me, that's been a very important thing. And also the US, we look at what the US has done in terms of cutting their tax rates and trying to get the IP back to the US and so on. It's good that Australia finally, post-COVID, COVID, that we are moving in the right direction. And then also, because I do a lot of work in the startup industry and I've sort of seen it for the last 4 or 5 years, there's very exciting companies that are, growing very rapidly, what we call the hockey stick type growth, coming out of Australia and then going into Asia, going into Europe, and then going to the US. So there are incentives obviously now to keep the IP here. So we want more Atlassians, right? We want, I know we have the me sector, but Dinesh, what you do at netStripes as well is enabling SMEs to compete like big companies, right? Through their innovation and their strategy and so on. So I think, like Sandy said, I think if you look at the market as well, the market has responded well. I mean, the share market is at 6,500, right? The interest rates are all-time low. The property sector, because I actually bought a property recently, but my nephew is also looking for a property, and it's pretty hard to get a property now. It's not. There's 30 people lining up. So I think the guy, overall, I know we've had the lockdowns in Victoria, and that's been very challenging, with Victoria being the second biggest state, and that's obviously been a hit to the economy. But the government has managed as well, and let's keep our most people are quietly optimistic that we can avoid a recession, and that and the small business being the underlying thing that moves the economy. More than 80% of our businesses are small business, right? All your high street businesses, all the cafes, all the restaurants, the lawyers, the accountants, they all run this economy, and it's a service type economy. So if we can provide these incentives for them to now flourish through the latter part of this COVID thing and then come out of it, then hopefully, we have a good recovery. And, so for me, as you know, Dinesh, I've spoken to you many times before, I'm extremely positive about the economy. And I think, just one last comment, which I always talk about, George Street, right? Our George Street here in Sydney. I think in a post-COVID environment, initially I didn't like the rail line going through George Street. I was thinking, why have they done this? I'd rather have cars. But now when I look at George Street, I say that's a good idea, because it's going to become the epicenter of Sydney, and it's going to be packed. I can tell you now, it's going to be packed post-COVID, right? People are going to flock to there. So all the small businesses on George Street or surrounding areas are going to thrive. And also the other thing that's happened is for small businesses, because in a post-COVID world, we are going to have a lot of people working from home as well. The cafes in the suburbs will do as well. Your cafes, your restaurants is more widely spread. So anyway, I can keep talking, but these are non-tax type benefits that I see from this COVID.
Just one other quick thing to raise, as well as the R&D tax incentive, which is a major support for innovation in Australia. It's a big platform, and those regimes are all around the world, and that's why it's so important we have a good one. The government also announced some manufacturing initiatives around grants, and that's so they focused on some key areas: resources and critical minerals, food and bev, medical products, recycling and clean energy, defence and space. So if you're in those sectors, reach out, because there are some new grants that have come out in the last few weeks, and they're going to open soon. So one is the Modern Manufacturing Initiative. There's some supply chain resilience, in recognition that we don't want to end up where we were in March, where we, had to pivot quite quickly to produce some key goods that we needed, and the Manufacturing Modernisation Fund. All have been given a big injection of cash. One thing to remember, though, is grants are for proactive projects, so you can't go back and get them. You have to apply, and they're competitive, as opposed to the incentive, the R&D tax incentive, where it's an entitlement program. So you can have done the work and get access to the support. So they're the sort of the key differences. But really important to know, there's some key grants out there that you can access. That's, I think the government again is sort of saying they really want to kickstart our manufacturing here.
Thank you, Sandy. And how can businesses get more information about accessing those grants?
So we have grants. It's a bit of a minefield, the old grant space, no doubt. We have a grant specialist as a partner. She's been doing this work for many, many years. So we actually can help them sort of guide their way through that. So I'd recommend reaching out to us. But you can sort of search up on grants as well, if you want to just do a bit of research yourself. But I recommend probably talking to an advisor, because the way to approach grants is, they are competitive. So you want to put your best foot forward.
Exactly. Yeah. I think it's important to do that. It's also very important to get it right.
Yes.
I had an example with a client. This was about 15 years ago. And I went to see him one morning, and there was federal police standing outside the client. I was wondering what happened. I said that apparently somebody tipped off saying that he had incorrectly issued some invoices to claim the EMDG. It was a disgruntled employee who had done that. And then he had to go through an investigation and prove that, everything was fine. So I think it's very important that it's got to be done in the right spirit, and it's got to be done correctly. And at Grant Thornton here, we make sure that we get it right, because the last thing you want to do is get your grant and go and do something, and then you got a claim.
Yeah, that's right.
You got a bit right. So equally important with the R&D. I mean, Dinesh, about the R&D cases that have been, they came out years ago. PwC was involved in one of them, Task, I think it was. So it's very important. The R&D is done very correctly as well. And our team here, Sandy and the team, and we are partners in Victoria and in New South Wales, just make sure that we get this right, so that, once you submit that claim, that, it is correctly done, and you're not cutting any corners, so that, you can confidently use that money to go and then do other things and not end up in a situation where, all of a sudden you're going to pay back a certain number of dollars, right? And you don't have the money. So it can really impact your cash flow, and then you could be out of business. It's very important to get it right.
Thank you, Raj and Sandy. Some really valuable advice there, and some wise words there as well about that we have to be careful how we do things. There is a certain degree of compliance that we need to follow, because it is government funding that is available to us, and these are really good incentives. If used properly, they can really help all businesses to spur growth and innovation, of course. However, we need to take care. Now, a couple of other things I want to touch on. The instant asset write-off scheme has been going on for a while now. I think interviewed Raj and one of your colleagues last year on this as well. However, it has changed in form multiple times. So that's something I'd like to get some clarity on. But the other question associated to that is, these are hard times for small and medium-sized businesses. We haven't a lot of cash flow. So how does the government expect businesses to go and buy assets, and how do businesses make sure that they don't get into trouble?
Yeah, Dinesh, I think I might start on this, and I might tackle the first one, right? Just around, obviously, if you had the cash, we're talking about, giving an incentive of an instant asset write-off, right? Typically you buy an asset, you depreciate the asset over a number of years based on the life cycle of the asset. So now from budget night, which is October 6th this time, they've actually made made the actual turnover test up to $5 billion. So it's a big number, right? So anybody buying an asset any company, any business up to $5 billion revenue can buy a new asset and have it installed and used by 30 June 2022. So it goes out at 30 June 2022, which is probably about a year and a half. Is that right? Yeah, I got my maths right. Can get an immediate deduction for the asset. And there's no cap on the asset, right? So it could be any amount, right? So that's that. And then for SMEs, the test on that for that $5 billion test is new assets. And for SMEs, they can buy second-hand assets. And here we are defining SMEs up to 50 million revenue, right? So up to 50 million revenues, which I think, a lot of our, the audience here, Dinesh, we've got SMEs from, $1 or $2 million up to $20 million. So these companies can buy assets, second-hand assets, and get a full write-off. And lastly, under the old rules, Dinesh, there's only one limb of the old rule left, and that covered businesses between 50 million and 500 million. And for them, they can get a second-hand asset write-off for up to $150,000, right? So the old rule, there's only one limb of the old rule left, which covers businesses between 50 million and 500 million, and they can get a write-off up to $150,000. So those are the rules. Then, so a couple of new rules, just to summarize again. So business up to 5 billion can buy any asset, a new asset, not any asset, but a new asset can get a write-off up to 30 June 2022. SMEs up to 50 million revenue can buy a second-hand asset and get an immediate write-off up to 30 June 2022. And then businesses between 50 million and 500 million can buy a second-hand asset up to $150,000 and get an instant asset write-off up to 31 December 2020. So a couple of new rules, and then there is the old rule carried forward from the previous rules, right? So then the whole thing about cash flow, which obviously Sandy can talk to as well. I mean, that's a complex matter, right? Cash flow is a complex matter. Funding a business, right? How you fund a business, obviously we talked about capital raising, going to the banks. The banks have been lenient. Fundamental steps around collecting. We've got a working capital type service offering that we offer to clients where we look at their cash flow cycle all the way from debtors to inventory to creditors, and to maximize the cash in the business. Obviously, if you're buying an asset and if a bank's prepared to lend against that asset, the banks are pretty tight at the moment, right? So it might not be easy to lend against an asset purchase, right? So you're right. I mean, we get the immediate asset write-off. You've got to be in a profitable situation in order to be able to use that, right? Or it creates a loss, and now that you got the loss carried back, so you buy an asset for 100,000, you get a write-off of 100,000, you carry back that against a profit you made in the previous year and get $30,000 tax back, right? So the instant asset write-off can work with the loss carryback to give you a cash flow benefit. But to actually buy the asset itself, you're right. I mean, it needs funding. But I might hand over to Sandy to maybe make some more comments around, the whole thing of working capital and managing cash flow.
Yeah, and again, I think goes back to this cycle of innovation that we work with our clients on, where we talk to them not just about accessing programs and grants or the EMDG, for example, but also around, well, what's your overall strategy? So one of the things I did with a client recently was a bit of a strategy stock take. Now it's an SME, but understanding how can I take this great product that I've developed to market? So how do I actually get cash from this? How do I monetize and commercialize what I'm developing? So we do all sorts of things really dependent on what the company needs. But cash flow is king, right? Everybody knows that. And the great thing about some of these programs and the incentives that have been announced in the budget this year is that the government wants to kickstart the economy. They're stimulating it, they're putting cash in, and they're allowing companies to access some of that cash via the R&D tax incentive, via instant write-offs, and all of the support programs that are out there more broadly, as well as grants. So I think there is an ability, if you spend a bit of time on what was announced in the budget, and I know there's lots of articles that came out last week, you saw it everywhere, but do go and get some advice around what applies to you, because it's out there, and the government wants you to take it up so that you survive through this, and that you can not only survive but you prosper, and you can take your new products to market. You can pivot, you can invest more in something that was marginal before these announcements were made. So I think it's really important. We've got a great summary that we'd be happy to share. I think it got finished at like 2 a.m. on budget night, so there was a lot of work that went into it very quickly. But more to the point, come to us and sort of say, hey, these are my pain factors, or these are my challenges. And people like Raj and myself can really help you work through that and commercialize it. And as I said, we work in teams where, you know, are really good size to meet the market around SMEs, which I really enjoy working in that space and love working on their issues and their challenges, not just coming up with, here's a list of what you need to think about. It's talk to us about what's happening in your business. So it works pretty well. You're right though, Dinesh, you must always make sure you play within the boundaries, right? So one of the great things we do at Grant Thornton is quality. That's just something that, you know, is a given for us. It's really important for us, but you know, don't go and do something that's too aggressive. It's just not worth your while.
I might just add a couple of points very quickly, and then I'll obviously pass back to you. The Australian Taxation Office is also being fairly lenient at the moment, right? So, which can be a good thing and a bad thing, right? Because sometimes, you know, you create these liabilities and then you got to pay it. So be proactive with the Australian Taxation Office, because we negotiated, I think late last week, a payment plan over 36 months, interest-free over 36 months, right? So one of the things we are saying to our clients is make sure all your lodgements are up to date. Because there are certain provisions now that it's called a lockdown DPN. I don't know whether you've heard of this term. It's a lockdown DPN. What that says is that if you haven't notified a liability, a PAYG, which is the tax you withhold from employees, within 3 months of the liability being incurred, then if the ATO issues a director penalty notice, the director cannot get out of it by putting the company into liquidation, right? So there are some measures around COVID as well to give some relief on that, but the lockdown DPN is not being removed. So it currently exists. So what we would suggest to all SMEs is keep their compliance up to date, keep them in order, and engage with the tax office, put forward your best foot. And then obviously the cash flow is, you're talking about cash flow here. It's very important that you have realistic, right? So a lot of the businesses we are working with are really doing very detailed cash flow planning to make sure they can comply with the obligations during this COVID period. And there is still some uncertainty. And even at Grant Thornton, I mean, our CEO has gone on record saying that we built up cash reserves just to make sure that, you know, we get through this period, right? So I think that early engagement, I think with everybody, all the stakeholders, the employees, the bankers, the tax office, suppliers, you know, and making sure everybody's on board and there's a plan, a strategy to get you through the thing is very important, because you just can't leave it to guesswork, right? And then hope that everything is fine because things catch up with you. So I just wanted to make that comment as well.
Thank you, Raj. Absolutely. You know, if we don't plan and we don't take timely measures in these things, they really catch up on us, don't they? Look, some really wise words there. Again, Sandy and Raj, thanks very much for your time. Thank you for being so generous with your advice to us. But I can't let you go without getting one last piece of wisdom from each of you. So who would like to go first?
I think definitely ladies first this time, I think.
Look, I think it's just go away, have a think about what you've got planned, see what's out there to get support, and, you know, come and talk to experts about it. We're here to help. So we'd love to talk to, you know, some of the netStripes community about what you're doing and see if we can help you navigate through all of these programs and the support measures that are out there. We'd love to work with you.
Thank you, Sandy and Raj.
I think we're in a good place. Australia's done well, obviously, through COVID, and I think the government has been united, and I know there are a few niggles here and there, but that happens. But I'd rather Australia than the US, right? And we'll come out of Victoria soon. It's been tough in Victoria, right? But we're a resilient community. Australians are a very resilient community. We've gone through bushfires and so on, and we always support each other. And small business is the backbone of the Australian economy. They will come back strong, right? And the government is there supporting it. So I see, you know, us doing really well in the coming years and beyond that. So I think this was a wake-up call that we all needed to reset some of the things that Sandy spoke about in terms of R&D and so on. And it's given the impetus for us to go and do them, right? And then now we're going to be pretty focused. So our lead up to 2030 is very good now. Obviously, there's been some casualties along the way, which unfortunately, you know, is the case. But I think it's put us in a good footing to take the country forward, right? And Australia is going to regain its place as the preeminent economy in the region, right? So we need to grab that back. We have lost it to some of our neighbors and so on in Asia, but we need to take that back. So I think this will do that. So I'm pretty excited.
Well said, Raj. Thank you very much, Sandy. Thank you very much for both of you for spending time with us. It's much appreciated.
Thank you very much, Dinesh. Always a pleasure to be with you.
Thanks, Dinesh.